Hi everyone, it's Jack Bauer in the video. Today I'm going to be talking about Snap Inc., parent company of Snapchat, which just in the last hour or so released its Q3 earnings report and the market absolutely hates it. After hours it's down 19%, that's just as of making this video. I just looked on my phone and it's down over 25%, so I literally can't keep up with it the minute after hours. The stock is down without that, it's down 76%, nearly 77% year to date, having an absolutely putrid year. It's only just above its 52-week low of $9, just shy of $11. It's going to be make new lows tomorrow, probably in the $8 range, maybe even $7. Coming off a 52-week high of nearly $80. That is an absolutely staggering decline. The company's market cap is now only $18 billion. I'm interested in this company for a lot of reasons. Obviously, this could be a pretty good reclamation project if this company can turn it around. And also, Snapchat is often seen like a bit of a canary in the coal mine for other social media stocks and other advertising stocks. So oftentimes, Pinterest, Twitter, Facebook drop in sympathy with Snapchat, because the last couple of times Snapchat has released its earnings report, it's dropped by 25% or so, and it's kind of took the market with it. Last time it led to one of the worst days in stock market history, so let's hope Snapchat doesn't crash the market this time. So I'll analyse this report and see if this company's salvageable as an investment case. First of all, let's look at a summary of the quarter, and then we'll break down a couple of these segments individually. Revenue, 6% year over year increase to $1.1 billion or just over. Average revenue per user actually saw quite a significant decrease of about 10%, now at $3.11 compared to $3.49 last year. Of course, they've made up for this increase in revenue. They've obviously had an increase of users, which we'll talk about in a minute. Operating margin was a loss of 39% compared to a loss of 17% in the previous quarter. That's a significant increase. Adjusted gross margin improved to 61% compared to 60%, but that's an improvement that's barely worth talking about if we're honest, considered compared to the loss. Net loss was $360 million, including restructuring charges of $155 million compared to just $72 million last year. This is clearly a business that is not really getting any better. Free cash flow is $18 million, which is something to speak about for Q3, but compared to $52 million last year, not really anything to talk about. Everything down apart from revenue. This is very disappointing. A company admittedly, while it's still supposedly in its growth stage, this is a company that should be turning a profit with the ease of revenue and the margins. Its gross margin 60% is confusing because companies like Facebook seem to have a better gross margin and are better able to convert that to profit. And also the revenue. Part of the reason this stock is down so much is because that 6% increase in revenue is pretty much the lowest quarterly number in Snapchat's history. This is for a company that is priced at 4 times sales. It doesn't have any earnings. It needs to be recording decent earnings growth. It can't be decelerating as much as it has. Zooming in on the revenue. Globally, revenue is up 6% year over year, and they're probably expecting the bigger Q4 looking at that graph. In North America, it was up just 3%. This is clearly its most developed market, with over 80% of its revenue coming from there. Europe up 5%, again, nowhere near the development, and rest of the world and Europe are pretty much equal. Rest of the world, however, was up 22%, which is definitely nice to see. But what really matters here for Snapchat's revenue, the only real needle mover, is that North American, and just 3%. That is far, far lower than what you would expect for a company of this valuation, in my opinion, and is very worrying. One of the real bright spots, and one of the only real bright spots in this report, is the daily active users numbers. That came in a 90% increase year over year to 363 million globally, which is absolutely fantastic growth over the year. It's just a shame they weren't able to convert this revenue with pressure on the advertising revenue from inflation. North America up just 4%, but it's quite a developed market. You know, the 350 million population of the USA, 100 million, well, plus cards call it 400 million. If they've got 100 million in Q3, that's roughly a quarter. You know, people's grandmas and grandfathers aren't going to be using Snapchat. There's definitely a saturation limit. And as I've kind of expressed with Pinterest in the past, perhaps they're reaching this in North America. In Europe and the rest of the world, they have a lot more space to go. And this is reflected in their growth rates. The 11% growth in Europe and 34% growth in the rest of the world, which is clearly its largest market right now, which is kind of worrying considering the average revenue per user is by far the lowest here, and they're not really growing like they want to be. Average revenue per user was down in all geographies, varying amount 1% in North America, which is kind of okay, but globally down 11%. That's really going to hurt this business in the long term. You see, all year they've been struggling for average revenue per user, quarterly declines in each quarter year over year. Europe down 5% and rest of the world down 9%. That rest of the world number is really well, it's 10% of the North American average revenue per user number. So a real thesis for this, as we've seen with the likes of Pinterest, is to get this number up, and it's going in the wrong direction. And they don't seem to be able to buck this trend as inflation pressures mean advertisers are moving away from this company. I spoke before, and one of the key reasons investors doubt this company so much is its inability to prove it can be profitable over the long term or over any time period, really. And that is shown in these free cash flow numbers. While it has returned to being free cash flow positive, it's a 65% decline year over year in free cash flow, and just 18 million. I mean, in the scope of an $18 billion business, that really is quite pathetic and values this company at a ridiculous price free cash flow. Just not really worth celebrating at all, and shows that Snapchat, if anything, is moving in the wrong direction. This is a company that I believe has to prove its free cash flow positivity in the long run. Just prove it is a viable business, because right now it's a money sink. It's very hard to value a company at anything, by any metric, if it has no profits to speak of. One thing that has remained relatively steady is the gross margin and the cost of revenue. They aren't really moving that much. The cost of revenue in the around $450 million range, and the gross margin sitting around 60-61%, up from 60% last year to 61% this year. But again, these are just not really impressive because they're not recording consistent free cash flow profitability, and they're not showing any real signs of becoming a viable business, even with a 60% gross margin. To be recording a $300 million net loss on $1 billion of revenue with 60% margin is pretty embarrassing, in my opinion, for a company of this size and scale, and Snapchat's age. It should be doing a lot better. When you look at its peers, Twitter aside, all of the others are doing a lot better with a lot less. On balance, it's very hard to say this quarter was anything but bad for Snapchat, and the market is reflecting that, with it down 25% as I'm speaking. Revenue up 6%, the lowest year-over-year rise in the company's history. Average revenue per user down significantly, around 10 or 11% down. The one bright spot, daily active users, continues to rise, and that is why I feel like there's a redemption story here for sure. This company is extremely popular with under 30s, and that is definitely a market that advertisers will want to press, and there is potential for good average revenue per user here, and therefore good revenue growth for Snapchat. They just don't seem to be accessing it. As a company, they seem obsessed with the VR and AR, or just the AR, augmented reality section of the business. I'm not really seeing that as a needle mover going forward, nor am I seeing the Snapchat Plus premium service as a needle mover going forward. They are around 1.5 million, 2 million members on 360 million daily active users. That's really not impressive at all. Operating cash flow is pretty much nothing to speak of, and the stock is at the worst point it's ever been. Do I think this is redeemable? Possibly. It's not a company I would like to invest in. I think there's a long way this could go down. And I just don't think this is an investable business right now by any means. And I really hope that many of its other peers don't drop in sympathy again. I saw the trade desk story down 6 or 7% in sympathy with Snapchat. Of course, all this being said, you should let me know your opinions down below, because there's definitely an argument that could be made that this company is redeemable and could be not a value play, but definitely could be a swing play if you like. Let me know what you think in the comments below. I'm not a financial advisor, so you should not take my advice directly. You should do your own due diligence and research and not just listen to me. Let me know what you think in the comments down below. Like and subscribe and enjoy the video. I'll see you again next time.